This is Eric Muathe, Muathe.com. Let's take a look at Nike's long-term monthly chart, and this is 3 years of monthly data. So what I want to point out here is two levels. So the first one is the current monthly closing high, and that is at 87.59. Going back here, so let's draw a line representing that level, and then we can draw another line, which is this recent monthly closing low, and we can draw again a line representing that level, and that level is at 77.14, which is this monthly closing low. Alright, so right now what we see is, on hindsight, we can see that there was a failed breakout attempt here. We spent some time above 85.59 for the month of July, but ultimately we did not close above it. In other words, this was a failed monthly breakout, and at the highs of this month in August we tried to break out again. That was unsuccessful. So we already see that there is a red flag. The failed breakout is a red flag. I would say the second red flag, if and when it happens, is should it break below 77.14, because that would be the second major red flag. So in other words, in simple terms, if the stock is to trade well above the 90s, obviously we would need to see a price breakout above 87.59. And at the same time, if the stock is going to trade in the lower price range, let's say in the 40s, 50s, or even lower, then the first order of business would be a break below 77.14. And again, the key here is the backdrop story is we already have failed breakouts. The last thing you wanna see is another red flag, which would be violation of the recent monthly closing lows of 77.14. Those would be the levels to watch. Lots of stocks, since the market has pulled back off the highs of 2019 so far, a lot of stocks have the same type of a look and feel. So just be aware, a second red flag would actually be problematic for a lot of the stocks that we are following. Eric Muathe, Muathe.com. As always, good luck, peace and blessings. ESCS.